Do you seriously feel for a second that wealthy people are using their own money to turn their thousands into millions and millions into hundreds of millions? Now look, note, I'm deliberately using the word wealthy. Rich is someone who earns a lot of money, like physicians, artists, and athletes. Wealthy is the dude that owns the enterprise that pays the rich person's salaries. Wealthy people will never share this information with common people, but I am going to tell you today exactly where the wealthy are investing and what it takes for you to be a part of that private club. Hi guys, I'm Mano and welcome to another episode of Sweet Money. I'm a Canadian and US CPA. I've got a cool little accounting firm, better known as Shandel CPA. One of the many facts of life is that the common man's 9-to-5 job will not generate enough income for you to become a wealthy individual. People in beast mode develop a wolf mentality in which they use your money in order to make themselves wealthy. The formula is very simple. You're a sheep. So you go, you earn your salary, you save a little bit of money, and because you're a good boy, you put in a GIC, you're earning your 4%, while the wealthy are earning north of 10%. A sheep will take debt to buy cars, vacations, and waste 4 years obtaining useless educational degrees of no value. A wolf will take debt to invest in appreciating assets. I want to share another secret with you. True wealth is not generated by investing in stocks or properties or even tech companies. The elite invest in private equity firms. Do you know what LeBron James, Kobe Bryant, and Shaquille O'Neal have in common other than the fact that they're black, they're all over 6 feet 5 inches tall, and that they play in the NBA? What they have in common is that all three of these dudes have earned more money outside of basketball than they did inside the NBA. Let me give you an example. LeBron James has earned roughly $500 million playing basketball over the past 20 years. Over that same time frame, LeBron James has earned over $900 million outside the NBA. So it's a very logical question. What did he do? How did he do it? Homeboy teams up with Maverick Carter, a business tycoon, and starts a private equity firm called LRMR Ventures. Now, what does he do inside this company? Well, LRMR Ventures is a holding company that owns Spring Hill Company, Unlimited, Uninterrupted, Robot Company, a school in Ohio, and a charity because wealthy people like having charities, for it allows them to have their lavish parties while having 100% tax write-offs while they enjoy themselves. LeBron James' net worth is north of $1.2 billion because he didn't waste his time investing in bungalows or Toyota shares. Think about it. For you to buy one condo every 5 to 7 years will not move the needle in a life-altering way. Yes, you will accumulate equity, a source of income, which will provide a comfy retirement, but it will not create generational wealth. An article published in the National Post in November of 2021 said in Canada as a whole, over the past 20 years, the real estate market has gone up 8.1% year over year. Okay. In recent times, that 8.1% growth has come down because Q4 2023, 2024, 2025 year to date has seen a double-digit decline. And with Carney in power, 2026 doesn't look very sexy for the real estate market. Over that same 20-year timeline, the TSX, S&P 500, NASDAQ, right, has averaged around 8 to 9%. Now, the figures are somewhat similar to the real estate market. However, it's funny how the perception is that the real estate market has been gangbusters versus the financial markets. I guess the media holds more influence than we would like to believe. According to smartasset.coms, they took 1,500 private equity firms and over a span of 25 years they have averaged an annual return of 13.3%. Now, let me put this in context for you. The real estate market at 8% growth will double your portfolio in 9 years. Private equity at 13% will double your portfolio in 5.5 years. I think I've given you enough to think about, so let's move on to the last point I want to make. Take loans to invest in appreciating assets and never for depreciating assets. Doing the opposite of what I say is a recipe for financial suicide. Now, here's a very strong disclaimer. Many new private equity startups fail. A bunch of Joe Blows get together and start to pretend that they're Andrew Tate and primarily young adults who really don't know anything about investing their money are the ones who end up getting burned. Sergei Fedorov, a former hockey player for the Detroit Red Wings, invested in a startup private equity firm and claims he was robbed of tens of millions of dollars. Homeboy ended up losing his life savings. Invest in reputable private equity firms who meet these three criteria, and these are not negotiable. Number one, they have longevity. They've been around for over 5 years. Number two, they aren't begging you to invest, because usually private equity firms only deal with the elite of the elite. If they're asking you to invest, then there's something wrong with this firm. Number three, invest in private equity firms who have a very diversified portfolio, meaning they're investing in startups, SMEs, and global enterprises. Now, before you jump into your car and drive off to the nearest private equity office, be aware of these three rules. In order to get into this club, you have to meet certain criteria. So number one, the minimum investment is usually $250,000. That's the minimum. Okay. And you have to be an accredited investor. And by the way, $250,000 minimum investment means it's one of the smaller firms. But being small does not mean it's a bad firm, as long as they meet those three criteria I had mentioned earlier. Number two, according to pundits, hold the investment for at least 10 years. Okay? Now, if you can't shed the sheep mentality, then what you have to do is invest in publicly traded private equity firms listed on the Securities Exchange Commission. But you'll run into additional fees and unnecessary red tape. But on the flip side, the higher level of diversification will actually reduce your exposure to risk. Now you're probably asking, how do I become an accredited investor? Okay, now in Canada, an accredited investor is an individual or entity that meets specific financial thresholds. And these thresholds, once you surpass them, it allows you to access private market investments that are not available to the general public. These thresholds are defined under National Instrument Section 45, Clause 106 by the Canadian Securities Administrators, CSA. Think of it like a private club for the wealthy governed by very strict rules. Now, here's a breakdown of who qualifies. Okay, for individuals, the first thing to look at is obviously their income. So that threshold is you must have income before taxes north of $200,000. If you're a couple, then your gross income before taxes should be north of $300,000. Once you pass the income threshold, now they look at your financial assets. Now, financial assets are your assets excluding real estate. So you must have at least $1 million worth of financial assets before taxes. You've passed that threshold. Now your net assets, meaning assets including your real estate, must be north of $5 million, which means your assets minus any debts or mortgages has to equal $5 million. And lastly, a person's registered in Canada under securities legislation as a dealer or an advisor. Now, if you're an entity, whether it's a corporation or a trust, your net assets must be north of $5 million as shown on the most recently prepared financial statements by a CPA. These criteria are put in place to ensure that the accredited investor, number one, has the financial means, and number two, the potential sophistication to navigate complex private investments. And then once you're part of the big boys club, right, accredited investors have access to private placements, venture capitals, certain real estate syndications, which are not typically open to the general public. Now, let's call a spade, right? People who can't become accredited, but like being wannabes, they run towards crowdfunding. All right. Now, I tend to lean on the conservative side. Therefore, I steer clear of crowdfunding. I have a client who lost $750,000 through crowdfunding for a commercial real estate project, which never even took off. And for all you teenagers and young adults out there, this is for you. Working for a private equity firm is a very prestigious job and can take you to places, but it is very difficult to get in. Top private equity firms hire grads from the best of the best universities, okay, with stellar grades and pristine resumes. And due to the fact that they hire the best of the best is the reason why they provide annual returns north of 13%. And now let's take this a step further, right? Let's look at what LeBron James did. Once you start investing in private equity firms, your goal is not to stay there forever. What LeBron James did is he started his own private equity firm, right? So your goal is to network with movers and shakers and to build your own army of investors and start acquiring companies. Chiefs argue over what's a better investment, a condo or a specific stock, right? A wolf pack argues over which company to buy next. And remember, it all starts with a simple conversation.